Hello, everyone. This is Andrew, and I want to talk about a new IPO called Playtika. When we're buying stocks, we're not just buying pieces of paper or gambling. What we really want to do is try to understand the company and put a combination of fundamentals and technicals. So I know this company. They are headquartered in a town that I've lived in for the last maybe 15 years in Israel, in Herzliya, Pituach, actually. And I always see their signs. I see their building, and I saw that under the underpass they had this big sign. And they make games. They make games for the casinos and mobile gaming. And what's really cool about this company is their earnings went from like 16 million to 259 million, and they're not a small company. They're doing like a revenue of about 1.8 billion dollars, and they have something like 3,700 um, uh, employees spread around from all the way from Australia to the United States, Israel, Europe. So they're a rather large company. And why am I pulling this out? Because they just recently had an IPO that it was in the something, I forgot how many billions, 1.8 billion, some crazy number valuation. And it's a company that I understand. I like buying stocks and companies I understand. Like I bought Logitech. I get it because everybody was stuck in their homes and they were buying all kinds of computer equipment from webcams to mice to you name it, headgear, and also PayPal. Everybody seems to use PayPal. Well, Playtika, I don't care what happens in the world. People are going to play games. People are going to want to get involved in casinos. People are going to be doing things on their phone. So what I try to do, as I say, is I look at the fundamentals. I look at a company that I can understand. Then I always go to investors.com. I subscribe. I definitely suggest you to subscribe. And I do the rankings. It's an A minus, which is really way up there. The thing is, though, the return on equity and profit margin, all that, it does exist because they're just a brand new company. But you look through it and you run through a real checklist. Composite rating is low because it's brand new. The other thing, again, like you want to see this as a 40. This is cool. B plus. You go through this and you can go to investors.com and you can sign up. But the idea is that we're going to make a bet here because we're going to see if this trade is going to work. We don't know if any trade is going to work. Half our trades don't work. So what we're going to do is we put the trade on. Immediately we put in a 7% stop loss. We're going to be looking to buy this stock if it can break out of the high here. You can see it was 36.06. So we're going to add 10 cents. So it's going to be 36.06. That's going to be our buy stop. And then we'll put it like we're going to make a buy stop limit. So we'll make it 36.16 as the stop and maybe 36.70, 60 as the limit. We don't want to chase things. And then we're going to put a 7% stop loss. And then the thing, what we're also going to do is we're going to scale into this stock. And everything is pre-thought out. We're going to buy 50% of our position at the buy one, 30% of the position at buy two, which is at 2.5% higher than this 36.06. And then 4% higher will be our buy three, and that will be the last 20%. So we're 50, 30, 20. And if the stock works, great. And then we have a profit target between 20 and 25%. And then we have different rules where to add on. If there's pullbacks, if there's a pullback to the 50-period exponential moving average, if you have 12 days up out of 15 or 10 out of 12 days up. So this is an idea that I'm interested in. I'm actually going to have my buy stops working in the market. But again, this is just educational, just to teach you about IPO, breakouts and things like that. Take responsibility of your own trades. This is not a get rich quick. It's learning how to trade. Thank you.